Stock markets plummeted on Monday with benchmark indices falling sharply over 5% during the trading session. The Sensex closed nearly 3% down, while Nifty ended with a decline of over 3.24%. The sharp fall mirrors the global trend, driven by fears of a full-blown trade war, sparked by US President Donald Trump's tariff hikes and China's retaliation. These escalating trade tensions have raised concerns over the potential impact on economic growth worldwide. The 30-share BSE Sensex plunged 2,226 points to settle at 73,137, while NSE Nifty tanked 742 points to close at 22,161. From the Sensex pack, Tata Steel, Larsen & Toubro, Tata Motors, Kotak Mahindra Bank, Mahindra & Mahindra and Infosys were among the top losers, whereas there were no gainers today.
Reason being that on Friday, China announced the retaliatory measure to the tariff war which is ongoing, that they will also impose some the equal amount of duty to US import, and that was the trigger for market to take a tumble, and the investors world over feel that in the event of tariff war nobody wins, and it will slow down the global economy, it will slow down regional economy, it will have inflationary pressure, consumption will slump, and if the largest economy, they go through problems, the ripple effect will be felt world over. That's the reason that currently what we are witnessing is that it's because of the tariff or trade war.
Sectoral indices reeled under pressure with widespread losses across the board, where metals, capital goods and banks were among the hardest hit, with significant declines also seen in auto, financial services, realty and IT stocks as trade tensions weighed heavily on investor sentiment.
This will impact the world supply chains. This is going to erode the world capital markets. This might also cause recession across the world. So it's high time that President Trump will have to rethink his whole strategy. How is this going to help the world international trade and business? So the investors should not panic. I'm sure there will be a turnaround in some time when the markets bottom out. Also, there would be short covering by the investors.
This is a fallout of the American markets, which fell over 5%. All the Asian economies likewise fell from anywhere from 3% to 5%. Most of the sectors have been hammered out, so metal is one sector which is affected the most. However, FMCG, consumer goods, which has less of exports and rather almost no exports, and has the India growth story stitched to it, is showing some resilience there and has fallen to a lesser extent.
All Asian markets ended in deep red, including Japan's Nikkei, Seoul's Kospi, China's Shanghai Composite and Hong Kong's Hang Seng. European markets were trading in negative territory on Monday, with Wall Street ending sharply lower on Friday. Foreign institutional investors were net sellers on Friday as they offloaded equities worth almost 3,484 crore rupees.